Hi everyone, I'm Steve Knutson. Welcome to ShawnHerrick.com. I'm here with Shawn Herrick. He is the founder of the Business Brilliant Success System, and he is a top motivational speaker nationwide. He's also a success and wealth coach for me personally and many of my business partners as well. So hopefully you can get some great information here today, and we're going to talk a little bit about some questions that have been brought to us online. How you doing, Shawn?
Steve, absolutely fantastic. Thanks for being here. And welcome to all the viewers out there. Thank you so much for stopping by ShawnHerrick.com. It's an honor and privilege to have you here, and I hope that the information you gather today will bless you and help you grow a business. So,
absolutely.
First question. Let's jump right in.
Absolutely. This is from our Facebook and Twitter users out there. Gotta love them.
Gotta love them.
Absolutely. The difference between an asset and a liability. I'm wondering.
Beautiful question. Beautiful question.
Absolutely.
Assets and liabilities. You got to know the difference, and I would say most Americans actually don't know the difference between an asset and liability. Let me give you just a very simple definition. Assets feed you, and liabilities eat you. So what do I mean by that? Well, an asset is something that produces positive cash flow, which means it pays you on a daily, weekly, monthly, yearly basis. A liability eats you. It takes money out of your bank account, takes money away from you. So we give you a couple examples. One of the most common examples of an asset would be a real estate investment property. Not always single family homes, but let's say, Steve, I know you're working on some projects right now in real estate. Let's say you had a 100 unit apartment complex, and each tenant is paying you $1,000 a month rent.
I love it.
Well, pretty simple. 100 units times $1,000 each. Every month, $100,000 a month comes in positive cash flow. Now you're going to have expenses and HOAs and maintenance and management and mortgage and all that stuff. But let's say that's only $60,000. So you take the $100,000 minus the $6,000. Your net is $40 grand a month. Positive cash flow.
Not bad.
By definition, that apartment complex is an asset. Another asset, businesses. Paper assets, interest, dividends, anything that you purchase, buy, invest in that produces cash flow can be an asset. Liabilities are things that take money out of your pocket. Negative cash flow. Payments, a car payment, a house payment, credit cards, things you're making payments on, loans, student loans, anything, furniture, motorcycles, anything that is an expense is a liability. It takes money out of your pocket. So that's the difference between an asset and liability. You want to focus on assets, of course. Okay,
gotcha. Now, I know there can be some gray area on some of those. So for like a student loan or for like that real estate property that we're talking about, the commercial real estate property, can an asset become a liability?
Oh, absolutely. An asset definitely can become a liability. For example, let's say in the single family home, if you're an investor, want to be a business owner, went out and purchased a single family home, let's say that you're going to collect $1,000 a month in rent from the tenant. Well, if your mortgage is $900, your HOA is $100, your taxes are $150, your management fees are $80, you have landscape maintenance of $75, and once a month something goes wrong, the water heater busts, pipe breaks. Well, already you're spending $13, $14 a month, and you're only collecting $1,000. So by definition, that real estate property you bought thinking it was an asset is actually a liability because it cost you more than you bring in.
Right.
On the same level of a business, if you go out and invest, $1 million, $250,000, even $1,000 on a business, if you're spending money and not enough is coming in, well, then you have negative cash flow in a business as well. So let's say your business is making $10,000 a month, but you're spending $15,000 to make that $10,000, well then that business is technically a liability because it's costing you $5,000 a month just to have that business sit there.
Right, negative cash flow.
Negative cash flow.
Gotcha. Okay. The next question that we're getting online is my home an asset?
Well, see, that's an interesting.
I've got a traditional loan from a bank.
Yep.
I bought it. I have an interest rate, a good one because I bought it at the right time. Is that an asset?
Well, see, that's a very interesting question because common thought is that your home is an asset. People say, well, Shawn, I bought a home and it went up $20,000. I have an asset. Well, if by definition the answer is actually no, it's not an asset, because every month you have expenses that go out and nothing comes in that home. And if we took a deeper look into it, look at your banker's financial statement. Your home is an asset to them. So you spend $1,000, $2,000, $3,000 a month to have that home. That's negative cash flow. So it's a liability to you, and income comes into your bank, which is an asset to them.
So even though I might be getting a little bit of positive equity if the market goes up, they're getting the interest no matter what in their asset column.
Absolutely.
And I'm paying $400,000 maybe for a $100,000 house over 30 years.
Exactly.
It doesn't seem like a great deal when I think about it that way, but
absolutely not.
Either way, I like my house, but I hear you. I hear you. So what type of asset do you recommend getting into for first timers out there thinking, okay, I get it, asset versus liability. What do I get into? Where can I start?
Great question. My number one recommendation for someone getting started, maybe you have a job, making 30, 40, 50, 60 grand a year, but you want to kind of diversify in, and I think every responsible adult should have a plan B. And you want to start a business. I would definitely recommend some type of home-based business. There's really thousands of home-based businesses out there that anybody can start for $1,000, $2,000 total investment. It's basically sweat equity. You got to go out there and work. There's no free lunch. If someone tells you you're going to get rich overnight, I would run as fast as you possibly can. That doesn't happen. But rather than risking, $200,000, $400,000, $800,000, $1 million buying a Subway or a restaurant or McDonald's, I would say, start a home-based business, something that preferably has services that produces cash flow. Be mentored, find a good coach, find a success coach, someone that can teach you how to become successful. Invest your time wisely, go out and build that business. It builds character. You learn how to get a no, which is definitely something that will definitely happen in business. But I would definitely start with a small home-based business for your first asset.
Instead of taking a high risk of a lot of money, maybe take a low risk of time. Sweat it. Gotcha. Absolutely. I like it. So for, this sounds like I'm a huge fan of Rich Dad Poor Dad, Robert Kiyosaki. I'm hearing a lot of his principles that he's teaching and what you're teaching me right now. And I want to know a little bit more about the correlation, and so does our users out there. The correlation between how wealthy people think and what they look to do in their everyday financial statements and opportunity challenged people. The difference between
Absolutely.
those.
Well, so that's a very interesting question. And there's definitely a very strong correlation. And if you ever want to have something exciting to do on a Friday night, you can hang out at the U.S. Bureau of Labor and Statistics website. Exciting Friday night. If you go there, you'll find out that about 95% of America is living paycheck to paycheck. I mean, here we are in America, the greatest country in the world, and 95% of us are eating when the buzzer rings. We're a couple months away from, if we lost a job or lost an income, or one spouse lost their income, we lose things we're making payments on, lose the car, lose the house in less than 6 months. So 95% of America is living paycheck to paycheck to paycheck. That's scary. Flip side of the coin, 5% of America is financially independent. And so, of course, I definitely want to be on the 5%. I know you do, and that's why I've worked hard to be at that 5%. The correlation you're going to find between assets, liabilities, residual income, passive income, linear income is very, very simple. Financially independent people focus on buying assets that produce cash flow, produce passive residual income.
Right.
Broke people focus on buying liabilities, probably because they sit in front of their TV all day and they're bombarded by commercials that convince you gotta buy doodads. You gotta have this, you gotta have that. So people get off their couch, run down the store and buy a liability and make payments on it. They buy a $1,000 TV, make payments on it. By the time that's done, that $1,000 TV cost you $2,500 after all your interest charges.
Right.
Now you're stuck with a $2,500 liability that's not only worth $400 when you resell it. So the rich buy assets to produce cash flow.
Right. And
the middle class and the poor, they go out and buy liabilities that don't make them any money.
I like it.
So let's say you wanted to have a Lamborghini or a Ferrari or an Aston Martin, Bentley, some crazy exotic car.
Naturally.
Naturally, that's what I want to have. If you had $250,000 to go buy it cash, I wouldn't even do that. I would take that $250,000, leverage your money, go get a loan from a bank, buy a 10-plex, buy a 20-plex, something you can get that's an asset. Then structure the loan, structure the deal that your monthly positive cash flow makes the payment on that Lamborghini.
I like it.
So rather than either getting a loan or paying cash for that car, which is liability. I mean, cars are, you got to have a car, and having a Lamborghini is kind of nice if you want one. Go out and buy an asset, and that asset pays for your liability. Right. That's what the rich do.
Absolutely. I think we are all going to go purchase a commercial real estate building and go buy an Aston Martin. That's what I want to do right now.
And start a business.
And start a business.
Very, very important. Awesome. Well, Steve, thank you so much for being here today. We really appreciate your knowledge and your input in our company. You guys, thank you so much for stopping by. Hope the information we shared about assets and liabilities, residual income, passive income has been valuable to you. I hope that you'll act upon it. For more resources and additional information, you can stop by ShawnHerrick.com. Click on the VIP pass. You can become a free member. Have access to multiple videos, blogs, information, tips, tactics, strategies on how to become more successful in the world of business. So once again, thanks so much for stopping by. Have a fantastic and blessed day. I hope prosperity and success finds you. I'll see you at the top. Take care.
Thank you, everyone. Cheers. Thanks, Shawn.
Absolutely.